Dear friends, we have our XRP USDT screen, Binance. So let's do some analysis. Okay, it's been a while since I do the analysis because the market was on a downtrend, and right now, it is going up a little bit. So a lot of people are getting excited. But I would like to share my thoughts on it. Like I said, like market can do anything at any point of time. It depends on supply and demand. But at the same time, we do some basic analysis to see like what happens next. But a lot of times, what happens is the market prediction, whatever I make, like it does work out for me. So it's up to you whether to take it or leave it. Don't have to get rowdy about that I'm going against your thoughts or will or whatever. This is just my theory on it. It's about you whether to take it or leave it, right? So once again, like if you are investing in XRP based on my analysis, it's better like you always do your own research before investing in the market. And so having said that, let's go into the analysis for today. All right, so today is the 29th of June 21. What we're gonna do is let's go on the weekly chart and see how it looks. And once again, letting you guys know, like I don't mark support and resistance, or I don't use any indicators. I just trade pure price action, and I mark what is called levels. I never mark support and resistance, what you guys use or what has been taught to the general public by these investors, because they always teach you the stuff where it gives you very little money, and they keep most of the money. So like I try to reverse engineer whatever they do. So this way I try to get it as accurate as possible. Okay, now looking at this, anytime a market goes up and it makes a valley and it makes a peak, the peak must come back and retest that valley. But from what I see, is this particular valley did not get retested. There is a valley here, it did not get retested from the top. So why does it do that? Is because the market gets too bullish and then like it runs up, and then when something bad happens and when it comes down, that's basically where it's gonna go to. It's pretty much like say you have like 5 or 6 friends, and you are in a really bad debt situation. Who do you go and ask money for? The one of your friends that has a lot of money. So same like that. When the market got too bullish and when it shot up, like that's exactly where it's going to go and ask help from. And if you also notice, so when the market came down here to this level, it shot up a little bit, yes, but why did it drop? The reason is, although there were some investors, some buyers ready to buy at this particular level, it did not soak up all the crypto that was available. Like so there is still a lot more left. There is still a lot more supply left. So that's why it started dropping down. And moreover, like there is a level here. If you notice, like that's a daily level. If you notice, like it went directly to that particular level, and that's where it cashed out. Now when the market dropped all the way here, this here is a weekly level. If you notice, like that's basically where it went, and I tried to reverse. If you see right here, that's where it went and it reversed. So now it is showing signs of going up here. Yes, people are getting excited about this. Yes, but the valley that needs to be retested is right here, and it did not get retested at all. So now it have to come down here to retest this level right here, and then when it goes up it will have enough capacity to break this wedge, yeah, because this is the bigger wedge that is formed like when the market came down right here. If you see with these 2 points, like we made the downtrend line. Now right now if it goes up, I don't think it will have enough energy to break this, but at the same time when it comes down here, now the price of the token will be very cheap. By the time it comes down here to this level, the price of the token will be very cheap. It will be around, okay, so let's see, this weekly level is about 34.61, and the greedy level over here is about 32.62. So when it comes to this particular level, now whoever is buying at that level, they'll have a lot more coins to buy for very little money, and that'll pretty much soak up the entire buying order. Now that creates a demand. And what will happen mostly is, like, once it comes here, at that time the general public usually will panic. They'll be like, oh shit, like, it dropped too much, and they will start dumping more. And what will happen, that's when the investors will pick up right here. So you won't see the market go up like that. You will see it traveling along this line. Yeah, so pretty much something like it'll travel something like this, and you will see it slowly climbing on the wedge without even you noticing it, and then it will shoot up. So that's basically how the market works. That's how they buy it for cheap, and they won't let you see it. If you see over here, like, the market went up over here, and then when it dropped, and you see, like, like people were like, oh, like, we don't know what's going to happen. And if you see, slowly the accumulation happened over here without anybody noticing, and then it shot up, right? So that's basically how it works. And now everybody knows about XRP and everything, and a lot of people like get into trading. So this, when it shoots up, it will have the potential, because like right now, breaking this level from the top was not possible, so it's coming down, and it's easy to break it from the bottom. So when it breaks it from the bottom, it could shoot up potentially like to like anywhere like $5 or so, like on the first time. And then once again it will come back down. It will come back down to like find support on one of these levels, monthly levels or weekly levels, and then once again we'll try to do the same thing. Market always have to make this wedge pattern, and a wedge or a trend line is nothing but another level, and the more and more it gets hit, like the more and more it becomes weak. A lot of people, like, they think support, more and more support gets hit, like then the more and more stronger it becomes. No, it is not how it works. So if you think about it, say for example, like a level over here, when it got hit, yeah, if you see, the volume that came in was massive over here, but at the same time the same level got hit over here the second time. If you see, the volume is half of that, not even half of that. So the more and more a level gets hit, the more and more it's going to become weak. And and they taught you, the institutional traders, like the traditional style of trading, like when they taught you with support and resistance and whatever, like they basically taught you saying what, like the more and more it gets hit, more and more it becomes strong. But just think about it, it's the other way around. If you check the volume, that'll give you an answer. The more and more a level gets hit, and you'll see like the volume keep reducing, then it means like it's about to break that level and come down. So now let's get into the daily chart. So when you see the daily chart, This was the original trend line that was formed. So the market was running off of this trend line. If you see, like it went off of this trend line, and over here, if you notice something, it punctured a hole in that trend line. So what it basically is saying is, next time when I come down, I will be breaking this. That's basically what it's saying. If you notice right here, like, it already punctured a hole. And over here also, like, it punctured a hole. So now the next time when it come back to retrace on the trend line, the first touch, like, and then it pulled back, and even that, like, it went right through and then pulled back. Second touch, same thing, and then, like, it tested it and freaking broke it. It found support. It found support like on a daily level, and using a weekly level, it tried to climb back up, and this level, what was a support once, became a resistance now. So if you notice, like, it wouldn't let it back in, and that's when, like, it started dumping. Now it is trying to find support here on this weekly level, and it's trying to go back up over here. But originally this was over here, over here. And then what happens is, like, a trend line usually never ever breaks. Like, it is evolving. You just keep moving the wedge over. That's all. So the next thing what you did is, like, once that happened, like, you basically moved the wedge over, like so. Now, when the market was traveling along this line, what it did, like, it freaking dipped right inside, and this wedge let it in. Yeah. So now it went back out, and it tried to find support on there and going up. That's why I'm saying, like, next time when it comes down on this, it is not going to hold. This is going to give up. So what will happen is, like, it'll drop back to the next level right here. So that's what I'm counting on. Like, I will load up as much as possible, like, with whatever money I have, whatever profit I cashed out at top. Like, I will load up with everything, like, right along anywhere in here. The minute I see signs of reversal, like, I'm picking up right there, and then it will go up. So a lot of times, people, they are thoughtless, when it comes to trading. And just to show you, like, how these levels are operating, like, let's go on a 15-minute chart. If you notice, like, everywhere you go, like, it's always the level, like, it's trying to go back inside the level over here, and it got kicked down. And once again, like, it came down, like, found support on that trend, the old trend line, and then, like, where did it climb? It climbed back inside the level. And once it climbed back inside the level, what happened is, like, like, it used this level to shoot up. And where did it shoot up to the next level? And it got kicked down by these levels, and then it found support on this level, and then it shot up. And once again, like, it tried to get kicked down by this level, and it shot up. So the and I believe, like, this is on a 15-minute time frame. Like I said, like, what is like a small blip on a weekly chart is going to make a big uptrend on a 15-minute chart. Like, these are good for short-term profit taking, but I don't think, like, they are good for investing or anything, like, so. But as a trader, like, you have to be everything. You have to be a position trader, you have to be a swing trader, you have to be a day trader, you have to be everything. You have to be versatile for you to make money. And like, so there is nothing wrong with that. But at the same time, like, you have to be like, thoughtful of what you're doing. The minute the market tries to goes down or whatever, like, then don't oversit on your position. Just get out of it, right? Like, and I see a lot of people, they think that the market is going up, they buy somewhere over here and they see like a little candle and then like it gets knocked down. And the minute it comes here, they are like, nah, it's over 1% of what I'm losing, like, and they don't get out of the market. They would rather keep sitting. They see a little white candle form. Oh, it's about to go up. It's about to go up. It's about to go up, and they don't see all these things happening. All they care is about like the couple of candles that goes up. They don't see all these happening. They care about like this one particular candle going up. So we have to be smart. I mean, entering a position, exiting a position, and taking out profit, it doesn't come from a computer or a software system. It comes from your own mind. It's from the way like how you think. So if you don't have control over yourself on controlling your thoughts on how to trade well, then basically like you're going to be unfit to be a trader. So and I was an unfit trader to begin with, and then like I started uh, you know uh, validating my own mindset, and that's how like I'm still having fear of missing out. Like it's just that like I control it. So as traders, like you will have all those feelings, and moreover, if you give in to those feelings, like then basically you're gambling, you're not trading. So right now, as you can see, it made a level, and it is not going above that level, and it takes a while for it to break it. And just in case, even if it breaks, it'll probably go to 75, 50, and then like it should start dumping. And until that valley gets tested, it's not going up. Like that's basically what I feel. But then again, like if good news comes out, like say Ripple wins the lawsuit, and some good thing happen, then that will create a demand for the tokens. But other than that, like this will do exactly what it is supposed to do, and there is no point like fighting over like who says it's bullish or who says it's bearish. So just think about it and act smartly. And a lot of people like even say like I've seen this in forums like oh what are you talking about, like oh, you support Dogecoin. I mean, like nothing wrong with supporting Dogecoin or anything, because it doesn't matter. Like even if it is a piece of rock, and if money to be made, investors will make money on that, like using your emotions. Okay, so let's just look into that too. Like no problem. Although I'm not a big fan of Doge, let's just look into it too. Like if you see one good thing about Dogecoin, like I was like really surprised to see this actually. So that's why I thought like I'll just mention it over here. Okay. So this is a daily chart of Dogecoin. When all the cryptocurrencies are falling off, if you notice, Doge has consistently made an uptrend, it has gone up. Now, what happened was like this particular trend line, it gave up. If you see closely, when it tried to come back to this particular trend line, it got rejected, and then like it went and it tested it, and then like it ended up breaking it. Now, Doge, on the other hand, like as it was going up, it made a few other trend lines. It made a wedge over here, it made another wedge over here. So one of them will hold it. One of them, like when it lines up with the level, will hold it for sure. Now, this particular trend line is obsolete, so we can remove that off. So now if you notice, like it could actually like come back once again like to this level, and if it ends up breaking this, then next thing is like it should come back to this level. But here is what Doge is going to do, like because there is a few things that I have to point out, like when it comes to Doge too. Market got too bullish over here, it failed to retest this valley. Market got too bullish over here, it failed to retest this valley. And same thing with this valley. This valley did not get retested either. So, and there is a monthly level lining up with this, and there is also a wedge lining up with this. So either one of these, it could test and go back. Sometimes what will happen is like it'll just test this, and then like it'll start to go back up. And then if something bad, really bad happens, then where it'll land up, like it'll end up like right here or right here. So that's how the market will hold. So you have to think smart. You have to like try to reverse engineer everything, and that's the only way you're gonna win this game. If you just keep going with the support and resistance indicators, man, like none of your indicators work, man. Like the MACD or any of those that you do, like it doesn't work, because the problem with your indicators is like they are designed by these guys, so they can fail you, so you can lose money. So 30%, 20% of the time, like you will make money, and then rest of the money you'll give it back to the market, along with whatever capital you have. So that's basically it is designed. If there is a couple of things that works actually, like sometimes when a market is trending, you can actually use a pitchfork, Andrews pitchfork, and once you mark the Andrews pitchfork and then you change it to modified pitchfork, like that works. Stiff pitchfork works, but you just have to play around with it, like to get it right. And other than that, like the wedges and trend lines and levels, they are the ones that work. And MACD, if you see, like it shows divergence, yeah, like an RSI shows divergence, and oscillators, they show divergence. But say, like there is two kinds of indicators, if you see, like trend following indicators and oscillators. So if the market is going sideways and you use trend following indicators, then like you're gonna lose out big time. And if you use oscillator when the market is trending, then you lose out big time. And moreover, the most important thing, MACD, if you see, like when MACD is making a divergence, market is coming down, and then like MACD is going up, and then you believe that the market is about to reverse, and then you put your money in. What happens? Market continues to goes down, like while MACD like keeps going up, and then it'll turn back up. And by the time you realize that it is taking a while for it to turn back, you're already too late, like because you took the signal from the MACD, and it's not how it works. So oscillator, I remember like trading with oscillator, and the oscillator crossed over, and I'm like all pumped up, and I freaking put my money in, and then the market started going down, and the crossover, whatever the oscillator did, like it opened back up. So I'm like, geez, like so these signals, like they are not proper. And actually, if you see these signals after it happened, then basically you'll be like, oh yeah, like like it worked. But when it is still happening, these signals are like completely inaccurate. So I don't use any of those signals from any of those indicators. Like I'm just pure price action. So this is how I trade, and I believe XRP is about to come down a little bit more. And still the same. So let's see, like if it's working out like what I said, or like if it goes up. So let's just wait it out and see. And now, before I forget, like I'm gonna go back and change my wedge that I plotted. So this was supposed to go back here. So I keep moving it, because these wedges, they're nothing but evolving, right? So you keep moving it. And when is a wedge actually broken? Can I mean, just think about it in your mind, okay? Like when is a wedge actually going to broken? Now the answer to that is like every time. Oh geez, a wedge will break. Say for example, let's take this wedge, for example, move it over here, and let's go on a daily chart. Say for example this wedge, okay? The market say like if it goes up over here and drops down, goes up over here and drops down, like you always have to consistently keep moving this wedge. When is a wedge actually broken? Is like when this becomes exactly parallel, and then you break it, then this wedge is obsolete after that. Until then, this wedge still exists. It's like a beacon. Like it's like a beacon shining the lights on the ships, right? Like, so, you keep moving the wedge. Wedges are like evolving, they are constantly evolving. And say, for example, when you take a triangle tool over here and say, like, you plot a triangle, say from here approximately to the top of this, and you basically cover every single lines that is in the triangle. You see, that came back to the same pretty wedge that we plotted. Now what happens is, like, the market will respect all the inside boundaries of this triangle, and when it breaks it, you can still evolve this triangle. Say, like, if it breaks this downwards, right, like, you can still evolve this triangle to the downside, to however far like it goes. And there will be at one point where, like, this triangle cannot be evolved anymore, and that's when the market will break it completely and break loose and start flying. And then you start making a different triangle, right? So once, say for example, like, if this market comes down, like, it will respect this wedge on the inside of the wedge, and say, like, if it drops down to this, you will be still be able to modify this wedge to here. But there will be at one point where, like, you won't be able to modify the wedge anymore, and that's when, like, you will see it, like, going back up, and then, like, it'll respect the inside walls of this wedge, and then when it breaks it out, and then what it'll do is, like, the same wall that created resistance to go out will become support, so it'll pretty much step on this and then it'll start to shoot up. So you need to, like, play around with these tools. You need to try and play around with these tools and see what works and what not. That's the only way you're gonna do it. Have I made mistakes in my predictions? Yes, so many times I've made mistakes in my predictions. Sometimes I don't see it, sometimes I mark the levels wrong, like, I've done it before, and I still do it. But then, like, once like, how these levels are formed, and, like, why it is working the way it is working, then you remove the fear out of it, and you just go in with confidence. And my idea of trading is, it doesn't matter, like, if the price already started moving up or whatever, like, so long as when I put my money in, the market should go up like a rocket. And once I put my money in, and if the market starts sinking at 1%, no more than 1%, like, if I'm at loss, like, I get out of the market, I cut my losses and get out. I don't overset my position. So, I've done that several times, overset my position several times, and lost so much money, and no more, man. I learned my lesson, and if you guys are not interested in doing it, then you're gonna lose out big time. So, just be careful, right? All right, have a wonderful day.